Hi, Ben Kingsley here with another how-to session. Today I want to talk about tax and tax structures and potentially tax avoidance. Now, tax avoidance is illegal in this country, so it's important to understand what you can and can't do around tax. Now, in the property investment industry, there are a lot of property spruikers out there, and some of the way in which they entice you in and attract you to listen to them is to talk about some of these secret or hidden ways to be more tax effective than not. And it's really important to understand that. In addition to that, they potentially may encourage you to actually do the tax strategy as the primary reason you're actually investing in property. Now that's just crazy. If you listen to a lot of our other how-to sessions or any of our podcasts or any of those types of things, you will hear us say that you should never invest in property for tax reasons only. And if it is the dominant purpose that you're doing it, well that's tax avoidance. So it's really important to understand what I'm talking about here. Now, what are some of the things that we see out there? Complex structures about setting trusts up around sort of, buying and selling internal assets, all these types of things. You're going to sort of see this populist sort of opinion around the new age or the next way to do it. At the moment, the big one is around, paying off your home loan and raising the amount of interest or debt you're holding on your investment property. So it's almost a tax strategy that they're sort of promoting out there. Now, I've reached out to the ATO to talk about this because it does concern me when I see these types of strategies being promoted, because we have got results from the past. We can look back and see some of the cases. If you're not familiar, have a look at the Hart case, which went right to the High Court. And ultimately the tax office won the discussion around it was a tax scheme. So it was promoted as a tax effective scheme. And so the avoidance piece was successfully upheld, which meant that the client obviously had to pay or lose the tax advantages possible. Now, it's really important to understand that, because I'm starting to see more and more of these, with the property market booming so well, I'm starting to see more and more of these tax schemes being promoted. And that's just a warning to you in this how-to session. So what do we do about this? Well, we go and speak to a professional tax agent. Tax is a regulatory environment and you need to speak to someone who's qualified. So go and speak to a good qualified accountant who may have lots of property investment experience. And again, you don't want to push the envelope too hard. You want to do everything within the letter of the law. Explain your circumstances. Maybe, just maybe, a trust structure could be effective for you if you're looking for asset protection. But also understand that the more complex the structure, the more cost it's going to be for you. In other words, maintaining and getting your tax returns done each year is going to cost you a lot more if you've got all these complex structures. Okay, some of them work for some people, but the majority are best to stay away from those complex structures and do the right thing. I mean, ultimately, with any type of tax, we want to be paying tax because it means we're actually earning an income. Okay, negative gearing, perfect example, is only a moment in time. It's not a strategy. Okay, so in the earlier days, yes, it may be effective, but it's not the reason we invest. We invest for long-term returns and some passive income coming off that. So it's important to understand when you're looking at tax to get some professional advice and make sure that you understand the risk reward around how you're setting up your structures and the ongoing costs associated with those. Because I get annoyed when I see all these spruikers out there trying to get a position in the market, trying to say this is the next best thing and it's a secret structure. That's all rubbish. Okay, go and speak to an ethical and experienced tax practitioner and you'll get the best results. Thanks for watching.